Disputes Decoded with me, Chris Campbell. This is an ARB Tech podcast series where we will take a deep dive into a variety of legal tech issues by way of candid interviews with selected subject matter experts. Technology has, and always will, have a profound impact on dispute resolution. And in this series, we'll give you insights into where we're going next. We will demystify complex concepts, decode the jargon, and provide practical insights on advancements across the legal tech space. Join us as we navigate this future where law and tech converge. Welcome to Disputes Decoded, where we download the field of arbitration into the future. Hello and welcome back to Disputes Decoded, a partnership between ARBTech and Tales of the Tribunal. With me today is still Chris Campbell. I know, we're still here in the second series of the show. And to add to another layer of the deja vu, this is not repeating the past, but we have two familiar faces, friends of the show, Ms. Josh Klayman and Ferdinando Samaria, to join us here on the show. So this time, we're not going to talk about the same thing. We're going to talk about something new, something interesting, something that you could maybe use a few pointers on, pun intended. And we're going to talk about crypto points. Now, if you're sitting there wondering what in the world crypto points are, we're going to get into what crypto points are, some of the ways that they are affecting the crypto industry, and get some great insights from both Josh and Ferdy. So, Josh, welcome back to the show. Ferdy, welcome back to the show.
Pleasure. Thank you for having us.
Yeah, thanks so much, Chris. It's great to be here.
To start us off nice and easy, to do a little bit of table setting, Ferdy, can you tell us when someone hears the word crypto point, what in the world are they talking about? What's a crypto point?
I think in a sort of simplified way, it's a form of, for a better word, fidelity points, or if you wish, air miles. It's something that companies that operate in the blockchain and crypto space issue to entice users and potential customers or whatever the platform intends to do to start using the system at a very early stage. And in return for that, they issue these sort of air miles slash club card points. Now, I think the analogy kind of stops there, though, because whereas whenever you have a sort of point system with a normal retailer, there's generally a very transparent and detailed terms and conditions and rules. With points, the exercise is relatively intransparent. So, for example, generally, you cannot easily find out how many points are going to be issued, which in turn does not really allow you to determine quite clearly what the value of those points is, because when you end up having 100 points or something, if you've got 100 points of 1,000, then that's a significant proportion. But if you have 100 points of 1,000,000,000, then perhaps 100 points is not very valuable. And the problem is that because you don't have the reference amount of the overall issuance that the platform intends to do in the end, then it is sometimes a bit difficult to establish exactly what it is that you're getting. Also, because this is a totally unregulated and new space, there is really no standard way of doing things. So some platforms may be, relatively careful and well organized and publish actually some information. Others might actually be relatively, let's say, less generous when it comes to giving out information. And in the end, I think it has to be clear that your ability to convert these points into something that will give you a benefit at some point in the future is definitely not a given. And therefore, as such, because generally engaging with the platform will have some form of cost, which ranges from maybe time and computational dedication to the platform to possibly actually engaging in financial activities, you are putting in something and it's not clear at all what it is that you're getting out.
So I'm understanding that crypto points cannot get me tickets to Taylor Swift.
Well, I mean, in a way, there could very well be a promise behind some of these points that might get you there. The point is that how you go from what you think you're going to get to actually getting it is where the uncertainty sits. Now, of course, given that it's so unstructured, unregulated, and therefore not standardized, it is very attractive for the issuer, because the issuer, in a way, can sort of try to scoop up users and customers, making vague promises and really not giving very much away. And I always, I come from the world of finance. So whenever you engage with a counterpart in a financial sense, there are many ways of doing it. You can give them credit and that's well regulated, and it puts you in a certain position. You can give them equity, and that's also regulated, and that puts you in a very clear position also in terms of representation and obviously participating in revenues. Then in the crypto world, at some point we had ICOs, which gave you some sort of, again, future promise of participation, but through tokens. And now we've taken it one step further in terms of security for the participant slash investor, which is points, which are a promise, as I said, where it's not clear exactly what you're going to get. And also in terms of registration, whereas, for example, with ICOs, generally you get a token which exists on a blockchain. With points, you don't even have the certainty that there is actually a blockchain capturing this. Very often, it's a point-to-point database that the company issuing the points manages, and that's the only record of this. So it's not decentralized, it's not open and transparent, it's entirely proprietary and one-sided in many ways. But clearly, it's attractive for the issuer because also coins and blockchains imply costs, because generally you need to have either a blockchain which is sufficiently popular and liquid for things to happen on it, or maybe your own, but you don't have enough people. Then you've got gas fees. So every time you move anything, you've got to pay. Whereas with points, because they don't exist on a blockchain, you can give them away for free. It's a very one-sided kind of trade, I would say, which is not to say, of course, that some of these things are not led to airdrops of real tokens that had real value or access to services from specific platforms at some point in the future. But in general, as a choice, on a risk scale, I would describe it as being fairly high risk.
Is it okay if I jump in and offer a counterpoint on some of, no fun intended, or perhaps pun intended, on some of the thoughts?
Please, it's hard to see. Like I am turning towards you. So yes, you,
Okay.
Josh, tell us. Let us know your thoughts on these topics that he's
So
raised.
definitely from one perspective, I entirely understand and appreciate Ferdinando's views. So let me just say that first. From another perspective, I'd just like to offer the possibility that as there are things out there that people enjoy doing that have points, and those are games, and that with the gamification of everything and the interaction of the digital asset space and the video gaming space, let alone AI and all sorts of other things, there are a number of aspects of growing a community that often are borrowed from video games. And so similarly, like, even in certain exercise classes, people are looking at the leaderboard, right? So I wouldn't say that there is nothing to be gained by a user for having points, just showing that they are part of this, that they are a winner, so to speak, as you might see in like a video game of different sorts. So I think while I agree with Ferdinando that certainly we need to think about whether there is an issuer, whether there is like a developer of tokens somewhere down the line, that there is that space for folks to be able to have points programs that may be for certain jurisdictions. And depending on who's advising them, they may say, what, for this jurisdiction should just be kept at points. Right. So I do think in that instance, and there's a lot of crossover when we get into some of the analysis later, from legal perspectives and things like that. But I would just say, to the extent that we're drawing a picture of the world, right, that while some may have a financial motivation off the bat, there may be other motivations at play, and that not everything necessarily does involve a securities transaction or a potential securities transaction. Sometimes there can be reasons to have points that will remain points.
Lots of fascinating things in both of those opening comments from you. I'm going to ask you a more fundamental question, at least something that comes to mind as I hear these explanations. How did we get to crypto points? Or I guess what I mean is, I think it's on some level, if you're familiar with digital assets, if you've been dealing with crypto now, it's been around for a few years, you can kind of get the idea behind that. But, I hear this idea of crypto points, and I guess the theory of it makes sense. Where did this idea come from, and how did it come to play? Where was it innovated? Did you have any idea?
So one area where they've become quite popular is in the space of so-called liquid staking. So there are new platforms that, to do whatever they aim to do, they ask you to lock up some of your coins. So you need to pledge them into, for a better word, an escrow account, where they just sit there and are given as sort of proof of intention of participating. The coins that still belong to you, you can get them back, but they are locked up for a period of time. Now, because the locking up process makes people think, hold on, what if there is a market move? What if I want them back immediately? Is there a settlement risk? It's not always very attractive. So what some of these platforms do to entice people to feel comfortable staking the tokens, real tokens, is actually they give them a certificate of staking, often in the form of points, which allows them to basically use them for other purposes. And so it is true that the token is locked up in an escrow account somewhere doing something, and therefore you cannot touch that, but you can actually play around with the receipt that you get given. Now, that receipt sometimes is a token itself. So that is the case, for example, with the proof of stake platform in Ethereum, where whenever you do liquid staking, you actually get another token that represents the token that you locked up, and there is a whole different market for that. But actually, for some of the newer platforms, which have not been yet successful, that would be too expensive. And so what they do is they issue points as receipts for staking that can then be used in some other contexts.
In other types of transactions and businesses, you may have, and often do, you may have video game developers and others who are looking to develop applications involving blockchain, right? Or other sorts of things, who say, hey, we want to build our community. We want to reward users. Now, they may ultimately down the line decide that it would be really great if we could have, for example, our own token or some way to actually reward users, right? But I think sometimes that may be done in such a way where, okay, you say these are just points, they may have no value at all. And they make clear that, say, hypothetically, in the US, you won't be able to redeem your tokens. I mean, your points for tokens, right? Whereas in other jurisdictions, maybe you can. And similarly, when you ask the question, Chris, about where did some of the desire come from, a lot of times people point exactly as Ferdinando did, where you look at loyalty points or airline points or something like that, and you say, well, this is something that's been around. How does this work? What I would say, just for a moment about those, just as a quick aside, is that one thing with loyalty points and airline points and things like that, just as Ferdinando said about having terms and conditions, a lot of them, there are a lot of restrictions on transfer. I mean, if I enter in a different name on an airline ticket, unless I go through a specific process and unless I have the ability to transfer it, like, guess what? I'm not going to be able to transfer those points. And those are some fundamental aspects of some of those traditional types of loyalty programs. What I also would say, and we can get into it more later, and I'm sure we will, is when we look at things, say you are dealing with video games, from a US perspective, there's a big focus on tech from a national security perspective. So you really have to think about, okay, if you're going to allow people to move points in whatever form from a game or from an interface into a wallet and remove it from the platform or the app, then you have to start thinking about, like, know your customer, anti-money laundering, all sorts of other things that you might not normally think about in a video game space. That's holding aside the securities law and other questions that I'm sure we'll talk about.
Yes. So Josh, I guess what I'm hearing so far is okay. So conceptually, crypto points are these sort of incentives that developers of cryptocurrencies can offer their customers, right? People that want to transact using that currency. And it can take a lot of different forms. Number two, right? It can take forms of basically some incentive to continue to transact with that currency. And ultimately, as you've just said, there are all sorts of implications related to the transfer of those points and where those points are used and deployed, depending on who their customer is, where their customer is, etc. Is that right?
I think that's right. Although I would just clarify that in the beginning, points may just be points, depending on the stage of the process of the business and the thinking. They may say, hey, look, we want to see where our users are. Who are our most popular users? Like, where are they located? Things like that. And, create a buzz that way. That doesn't mean necessarily that they will have an airdrop later. It doesn't mean necessarily that those points will be transferable from one to the other, or that you'll even be able to redeem them for anything of value or use them for anything. Just again, like when you're in an exercise class that I have not done, but I've seen, like, some people are pretty competitive about where they are on the leaderboard. And so I think, just as we think about this, And as we think about the economic realities, as some regulators would say, in certain instances, yeah, maybe it does look more like a financial transaction, including from right off the bat. And maybe at other times, it might look more like a game.
So then I guess the next question that I have for you, Josh, and just sticking with you for a bit, is when have you started to see this concept of crypto points starting to come into effect? I guess generally you don't need like a specific date, but like when have your clients started mentioning these to you? And secondly, what does that look like on the day to day of how crypto points issues come up generally?
Well, I would say to the best of my recollection, I mean, I remember a few people a long time ago, many years ago, saying, well, why are tokens holding aside points, but why are tokens different from loyalty points? Right.
Right.
And certainly there are clients of various kinds, even outside of the crypto space, where they do want you to help them establish a bona fide loyalty points program. So holding those aside, I would say that crypto points in the gaming context, really, I think in the past maybe 2.5 years, that's when I recall them bubbling up from a video game perspective, and Web3 gaming, which is, to be fair, where I've most frequently encountered them. Although, as Ferdinando said, like there's all sorts of different other applications, including DeFi and others. So, with respect to your second question about the day to day and what pops up, I think it depends on where in the timeline people are in terms of their planning. So, from a video game perspective, which is what I'll say for the first part, I think the first part is, at one point, folks are interested, I'm sure actually at every point, in building the community, right? The idea with video games is you never want someone to exit. You want them to always to be in there, always to be playing. And it's really important, I think, just to remember for a moment, the ethos of video game developers is not always the same as those who are, say, capital raising. Because the idea is you want your users to enjoy playing. You want them to not feel like they necessarily are doing something other than having pleasure, right? Or having an escape. And so I think when people start with points, sometimes they have a longer range thought of how that will work. But I think a key piece is making clear, these may have no value at all. They may do nothing. This is just for fun. This is just a game. Why is this important? Well, number one, to try to avoid creating an expectation that this will in some way lead to a profit, which goes to the Howey test that maybe we'll discuss a little later. So that's one piece, because as Fernando has suggested, there is not necessarily disclosure on how things will be used or how points may be translated into something else, or maybe not. And so there is not necessarily that disclosure, but having disclaimers saying this may be nothing at all, I think that's important. Another piece is what I touched upon earlier, which is the question of, again, like, even though these are points, if they are ever going to be turned into something, such as digital assets that are going to be able to be removable and holdable in a wallet of a person and taken off the platform, then governments such as the US are going to worry about things like, okay, who is getting this value? Could this be used to be funding terrorism? Could this be used to be money laundering? Could this be used to evade taxes? Like, who are these people? And we are seeing more and more developments under US law, including proposed rules by the Commerce Department that would potentially apply KYC, know your customer, anti-money laundering requirements to infrastructure as a service providers, right? And a lot of times in the blockchain space, people take the position, I'm not a money transmitter or something like that. I'm not a money services business. I'm providing infrastructure. But even so, I just use it as an analogy to say the government's going to care if you're allowing value to come off the system. Another piece is, okay, so say you do ultimately have a token. How are you getting it to folks? Will it be an airdrop? That's frequently what's done. And then there's the question of that Howey test that I mentioned, which is there an investment of money in a common enterprise with a reasonable expectation of profit based solely or primarily on the managerial or entrepreneurial efforts of others? Well, some may say, hey, there's no investment of money, but depending upon the expectations that one may have created, and I think this is some of what Fernando was getting to earlier from a different legal perspective, but there could be an argument, is what is being transacted, could that be a securities transaction. And so you have to think, okay, maybe these points that are turned into tokens, will they be only for folks outside of the US? And then do you have to have some kind of restriction on transfer? These are all sorts of questions that as you go along, they pop up. And so there's questions about communications. Should you be tweeting about this? Should you be limiting, if you're saying you're not going to allow people in the US to participate if these ever do become tokens, are you actually walking the talk? And so I think the day-to-day issues are different depending on what stage you're in. But let me just pause in case Fernando has any thoughts.
No, perhaps I'll just add, obviously, there's the fiscal dimension as well. When somehow these points can be converted into value, that generates a tax liability. And so how that is approached and managed remains to be fully understood. As well as clearly you were mentioning, can people tweet about it or whatever? The classic protections that you enjoy in financial markets about insider trading, market manipulation, etc., etc. In a space like this, obviously, it's entirely open to any form of, better word, abuse. It's complicated. I think when you look at it from the gamer's point of view, yes, I see the sort of commitment and almost romantic angle, even though even in the gaming world, I think of crypto kitties and other things. The financial extremes tend to kick in very, very quickly, I'm afraid. And I think it is unfortunate that generally large interests are always driven by people imagining and dreaming that they can make money quickly. And so, and I think that is where one has to be careful, because points in a certain way represent possibly the least sort of recommendable activity from an investment point of view, for sure.
Ferdy, I'm coming to you in just a moment to ask some follow-ups on that, because you raised a couple of interesting points, and I want to hear more about the financial impact. But Josh has mentioned gaming a couple of times now, which begs the question: Josh, are you a gamer? Do you game?
I mean, aren't we all gamers? I mean, whether it's like, old school gaming with going way back, like Atari and Commodore 64 and Nintendo and, all those sorts of things, or IBM PC Junior, up to, the Segas and the PlayStations and everything else. I mean, even on our phones, these word games. I feel like, even if I ask my mom, I asked her one time, like, do you think would you consider yourself a gamer? And she was going through all these games that, she plays on a daily basis. So in a way, I feel like we all are. And more, I expect to see the gamification of everything, just about.
How about you, Ferdy? You game?
Oh, yes, absolutely, yes. And I started off writing video games when I was young. And I always remember the challenge for me was I need to write a video game that I can play. And therefore, how do I do that? Because as the designer, I will know all the tricks. I know. So the thing that came to rescue me there was randomness. So I would introduce a lot of random events in the video game so that I could play on par with everybody else. But I think the thing that worries me a little bit is that points per se are neither good nor bad, and it's certainly not anything new. The point is that you need to very clearly have a look at who it is that you're dealing with and at what point in their maturity process the counterparties. So where you have a gaming company that has been around for a while that gives you points, then you go back to the situation where you know what's happening. There are probably terms and conditions. You're going to be able to convert those points into, I don't know, weapons if we're playing a video game where you're going to shoot people or whatever, or anything else. And that's fine. If you've got platforms that have been around for a bit, and there are, major centralized exchanges that will give you reward points if you trade on the platform. And that's, again, fully understandable. You know what you're getting in, and you know what you're going to get out. What I find uncomfortable is companies that are right at the beginning, where it's actually not clear the direction that they're going in, and where the terms and conditions, as I said earlier, are essentially not there. The number of times that I come across comments on crypto forums where people say, oh, there was an airdrop for my points, but I was really disappointed because I was expecting 10 times as much. Yeah. And I read that and I think, hold on, how is it possible that the variance between your expectation and reality is a multiplier of 10? To me, that is a blind trade. It's a unilateral trade, and it's one that I would be, extremely skeptical and wary to engage with. But again, that's possibly my financial background. But I find that in most cases, it's a totally unilateral contract where the contract is not even actually disclosed to you in full. And therefore, as such, is one that I would be, analyzing in detail and be extremely careful about.
I think that's a great point. I mean, I think even if you take the romantic view, right, of certain game developers, for example, even with that, there's the question of, have you primed the market? Like, have you created an expectation such that when people are playing this game, that this is an investment decision on their part? Is that what is happening here as a reality? And I think that makes me think a little bit about, there was a cease and desist order, I believe in 2018, if I'm remembering correctly, with Tomahawk, SEC v. Tomahawk. And in that instance, as you guys may recall, there, by the way, nothing on this podcast is legal advice, investment advice, accounting advice, tax advice, any kind of advice, unless.
Nor does it represent the impressions of anyone's employers or clients.
Exactly. Or even necessarily us, as we're still working through it. But yeah, so with SEC v. Tomahawk, as you guys may recall, there had been a planned ICO. It was abandoned. It was for the Tom token. And instead of proceeding with an ICO, the parties there, and let me just say, there were not points, but this is just the question of whether an airdrop in certain instances in the SEC's view may involve the transaction in securities, right? The promoters decided that actually they would reward people for sort of telling a friend about the Tom token, right? By giving them tokens, right? And so that's how this airdrop would work. It was bounties, essentially. And not bug bounties, but the other kind of marketing bounties. And so what the SEC said in the cease and desist order, which you have to remember was a settlement. So it was not litigated. There was no court weighing in on this. To me, they collapsed the inquiry a bit. So I'll explain why in a second. They basically said, okay, if you're giving away a security, and this is where they collapsed the inquiry, right? They didn't actually establish first that you had a security necessarily, but they said if you give away a gift of a security, for that to be the sale of a security is a very low bar. And so they pointed to early internet cases in which folks were just giving email addresses and things like that in order to get these free stock giveaways. This is around like the year 2000 or 99, thereabouts, right? And so they had said, well, look, yeah, you said those were gifts, but actually these people were creating a public market for this security. So here they said, yes, you gave away the Tom token, but you were giving it to people who were marketing on your behalf. And who knows, perhaps those people, maybe they were broker dealers unregistered, right? And maybe they were, all sorts of things if you follow through the logic. But I think the important thing is that there is a distinction between that and the free stock giveaways, which is that free stock giveaway involved equity, which is a known security. And the question of whether there was an investment contract, that's something that kind of got glossed over. But I think that is one of those enforcement actions by the SEC that we sometimes trot out to say, look, you can't just assume that just because you're giving away something that you are not still creating an investment contract with them.
Now, I bet Ferdy has something to say about that from a financial standpoint.
Well, I think that in this particular context, we need to widen the scope and definition of what an investment is. So an investment is not necessarily a financial engagement per se. I think spending an hour playing a video game or engaging with a platform, a new blockchain, for example, and producing movement on that blockchain over time, even if it does not have directly a financial cost, but perhaps requires either time or indeed computational capabilities. I think these are all different forms of investment. And I think it has to be clear that because they're seen as valuable by the developers, then indeed that's exactly what they are, which is the reason why, at least in principle, they promise to give you some points. And so I think the first thing to say is that nothing is free. That's the very first thing. But then also, because ultimately you're dealing with digital platforms, highly programmable ones as well, very often some of these programs provide boosts an accelerator, for example, if you refer friends, if you do certain types of activities, well, a lot of this stuff can actually be automated. So I can refer a friend who just happens to be another one of my digital wallets, and you don't know who these digital wallets belong to, engaging in some clone activity that I'm doing, or possibly being at the other end of my transaction. So I keep, bouncing the same ball back and forth, but actually it's always left pocket, right pocket, creating false volumes and activity on a blockchain just for the purpose of generating points. So I think there is also an issue of sort of pollution to the new projects in terms of what constitutes effective real growth and what is actually people arbitraging the system through relatively simple digital artifacts. Because as I said, this stuff is all digitally interfaceable, and therefore it's extremely straightforward to set up ways of running around whatever point system promises to do for you in a way that makes you generate a lot of activity when in fact absolutely nothing is going on. So I think the layers of intransparency, of user behavior, which actually does not really point to real use of the platform, but rather expedience to make it look as if the platform is being used, all point into a direction where I think it would be an interesting thing to see if maybe 12 months, 24 months down the line, the volumes in this space are still going to be as we see them today. And I remember when ICOs came out in 2018 or thereabouts, volumes at the beginning were enormous, and then they quietly dropped. And ICOs now are a lot less popular than they ever were a few years ago. And I'm wondering if some of these combinations of points slash rewards issuance, airdrops, and final conversion to something like tokens or anything else, maybe in 24 months, we'll sort of see a major reduction in volume and activity.
So is it okay if I jump back in? So I would just say an interesting thought, and I agree with what you've said. I would also just add that there's to me, a really fascinating tension between, okay, investing time and computational power in playing a game, for example, on the one hand, as an investment, which it is. But then if you would look at it a different way, when you think about the Howey test, right, and an investment of money in a common enterprise with a reasonable expectation of profit based solely or primarily on the managerial or entrepreneurial efforts of others, I think sometimes in certain play to earn scenarios, it can look like the user is doing his or her own work or its own work. Just like when you have mining, and how in some instances the SEC has said, well, that's different because they're actually doing work and being compensated for the work. So I think I agree with you on the one hand. And then on the other hand, I can see a scenario in which, again, like, sorry that I'm stuck on these games for a bit, but where you're playing a game through your own efforts, you're winning points, you're redeeming them for the same or similar thing that you might in a traditional video game, like a bigger sword, right? Or a gun or something like that. And we know for years that gamers have been trading skins on platforms, right? So here, what if your gun is an NFT, right? And you then have it in your wallet, and then you trade it to a third party, or with the advances in AI, they're making it easier to have interoperability from one game to the other. I still think, while I totally agree with you from a financial perspective that is the reality of a lot of things out there, I do think that there are distinct areas where if you thread the needle the right way, you could have, essentially a token, right? A tokenized representation of a sword, right? That you got because you had points. And that's why I think the communications and the creation of expectations is so important. And this gets back to your point about terms and conditions, disclosures. What is this going to be? Because on the one hand, there's the question of, is there an investment decision or not? Are you creating in the user this expectation that because of some other prior event, they're going to get, as you noted, Ferdy, 10 times what they actually ultimately get, and then they're, not happy about it? Or, is it a different type of scenario? So I think this is, just adding in a bit of devil's advocacy here.
No, and of course, I mean, you've touched upon the potential for a secondary market. So points by and large are intended to be a primary issuance exercise where the platform or provider will give you the points and that's it. And eventually they might take them back in return for some airdrop. In reality, in certain cases, there may be secondary platforms. You were mentioning skins in video games, but of course, skins and NFTs of swords are already like the end game, as in it was a mature enough platform that had thought about the conversion of reward points into effective tokens. And so in a way, the rules are clear, and I accept that. I am a lot more worried about enterprises that are really early stage, where it's actually not clear what the business model is going to be. And therefore, this ability to convert whatever you get given into whatever they're going to produce is entirely intransparent. And where you even have a secondary market, possibly leveraged, because there will be platforms that will actually give you leverage against some of these assets, quote unquote. Well, you know, you get into a fairly speculative and high octane situation, I would say. So we go back to the gaming thing, and that is, I think I see that, and that's fine, because I consider that to be a well-defined, mature company. I am more worried about the early stages, as it were, where the whole landscape is entirely intransparent. By you making a request from users, you're asking for commitment, financial or otherwise. And I say, you know, be careful approaching situations like that.
I come back to one question here because both of you have mentioned it in different ways. One was a little bit of foreshadowing, and then it's been in the last two answers. You know, if only there was some way, you know, like, I don't know, like a decision from a court or something for how we could determine what in the world an investment is. What if there was a test like that, and how would we decide? Hint, hint, maybe I've just given another pun. Uh, Ferdy, well, do you want to talk about maybe what the Howey test is, and then how folks know what an investment is?
Well, I mean, the Howey, the thing that I like the most is what the SEC did a few years back about ICOs. In fact, there's a website called howwecoin.com, and you go on it, and first of all, as soon as you get there, there's a countdown that says there's only 23 hours, 59 minutes, and 40 seconds left before the amazing ICO offer that we're running expires. There are pictures of people in exotic places, flying private jets, with rock stars, meeting celebs, and saying, you know, this is your opportunity to participate in this ICO. And they say, click here if you want to purchase. The fascinating thing is that if you do a page refresh, you notice that the 24-hour counter goes back to 24 hours. So if it counted down to, say, 23 hours, 46 minutes, whatever, by doing refresh, it goes back to 24, which means that every time you get onto that page, there are always 24 hours to go. But in reality, when you click on purchase, it is actually an SEC website that comes up with a warning and says, this was actually a sort of fake website showing you what you should be looking out for. And be very, very careful with ICO investments. But it's extremely well done, because there is the About Us page where you see the pictures of all the entrepreneurs behind this initiative with their CVs and their photographs. I found it beautifully done. It's really, really good. So, but going back to that, to your point, no, I think it's being taught by new technologies that what constitutes an investment is a very fluid concept, you know. So your data is a cost to you. And we now know that for a fact, because we get given so many things for free in return for allowing platforms, apps, and websites to spy on us, that I think even the common person on the street has now worked out that free it isn't. So I take the extreme view that anything asking me for anything, whatever the anything is, constitutes directly or indirectly an investment. And so my engagement with the platform that eventually will give me points is indeed an investment, because if nothing else, if I wasn't doing that and I was doing something else, I might have probably got paid for doing something else, and therefore by doing that, I am doing whatever it is in lieu of getting paid. So my definition is extreme at one end, but at the same time, extreme as it might sound, it puts me immediately in a frame of mind where I have to be vigilant and careful about any forms of next steps, which is why my first question is always, what are the terms and conditions? What is it that I'm actually engaging with? And I don't have anything against any of these platforms. I just would like to know, if I put in X, what the potential Y coming out is, with all the uncertainties in between, because if the uncertainties are driven by the fact that the business may or may not be successful, I get that. But anything that should convert numerically should be fully transparent and codified in a contract or terms and conditions. And I think we can force some of these platforms to get to that stage of transparency, because it is ultimately in their own interest.
Josh, would you add anything to that?
Yeah, so I agree with Ferdy. I mean, in the US, we have a disclosure regime, right? And that's what these terms and conditions are. They're disclosures. So I think it is very important. I think there are some other things I would just touch upon, which is I think it's important, the economic realities. That's a term that the SEC, likes to use a lot. And I think you have to ask, is this really a form of capital raising? Because if it's a form of fundraising to build out a platform, that's what the SEC has described, right? And ultimately there will be some sort of return, some sort of profit based on this building out that is being funded. That's what it's getting towards. Did I give you money or some other thing, right? Some other investment so that you could go do something with that money and then I'll get the return. And so really looking at that. And I think that while the test is based on the reasonable expectations of the other party, the party that's making the investment, you have to look at the reality of the situation and also the expectations for them to be reasonable. That means they were created. So that also gets into importance of communications and things like that. The other thing I just don't want to forget, and I'm afraid I will if I don't mention it now, is that, as I think you can tell from what Ferdy and I and you, Chris, are discussing, not all points programs or underlying businesses are the same. And in addition to looking at the stage and the credibility and the purposes of the players at hand, no pun intended, you also have to look at what is that business that you're being rewarded the points for. Is this a financial type of transaction in the first place? Is it being done legally? Is there a securities transaction involved there? Because then if you're getting points from that, could that be transaction-based comp based on securities transactions, which could be problematic for the entire platform, for example, as well as for the individuals receiving that transaction-based comp. So I think while it's easy for me to use as a foil, the bona fide gaming, right? There are certainly, as Ferdy talked about earlier, other types of businesses where the underlying business itself, you should make sure that you are absolutely clear that it's being done in compliance with law, separate and apart from whether you offer points and ultimately a token relating to it.
I think that's well said. I mean, and I think, sorry, Ferdy, you were going to say?
I think the one thing that kind of bothers me, and I'm a great fan of the DeFi world, but I am observing a drift. So you mentioned before the formal documentation that accompanies investments. I think of offering circulars in bond issuance, or whenever you do IPOs, the kind of documentation that needs to be produced. Then we arrived in the crypto world to ICOs, where the investment was essentially stimulated on the back of a so-called white paper. And let me tell you, I have advised people for many years in the space of private equity. White papers would not pass the test of any private equity investor, or in fact, even primitive investor, because these are very, very general documents with very little detail, and from my point of view, completely inadequate. So that was bad enough. Now we moved on to something else, where in return for whatever you're going to contribute to the platform, you actually don't even have transparent terms and conditions, you just have a vague promise. To me, these are all successive situations that are going to diminish trust in DeFi and the crypto space, where in fact I would be looking for exactly the opposite. I would be looking, because some of these platforms are amazing. Some of the stuff that they do is absolutely spectacular and revolutionary. I would actually go to the other extreme and provide very firm terms, very detailed documentation that describes activities, potential reward mechanisms, details of the business plan, etc., to give participants more confidence. Because I think long term, initiatives like badly structured points reward systems will actually undermine the space and not attract more participants. And so in the long term, they're not going to be good for DeFi or indeed other blockchain-based activities.
Where we started this conversation is the idea of, okay, I think the broader general public is starting to kind of get their heads around the idea of digitized assets, in particular crypto assets. You even have, mainstream institutions starting to adopt those. But I mean, I think it's an uncomfortable truth, for those of us that regularly operate in this world, that there has been a lot of fraud, right? But the fraud is from the bad actors, right? But that doesn't mean that the good should be thrown out with the bad. And I wonder then about the ethical concerns that we sort of touched on here today, that kind of come with the vagaries of what could be a promise that comes from a crypto point versus increasing the scrutiny and what in ways that we could do that. So what we've talked about today has been, what are crypto points? How are they being used? What they look like? Some of the different issues that relate to them, especially to that last point of the ethics surrounding them. What comes next? I mean, where are we going with this? I mean, when we're having this conversation 5 years from now, how do you see crypto points, or maybe whatever their next evolution is? Maybe starting with you, Josh.
I think just from a broader perspective, certainly in the US, we're just now beginning to see many of these larger enforcement actions wind their way through the courts, right? And some of the answers that various courts have given at the district court level, which of course are not binding on other judges, even in the same district, has been inconsistent and sometimes has led to additional questions for practitioners just about digital assets and the application of the securities laws to them generally. So I think we have a variety, as you guys know, of regulators in the US at both the federal and state levels that have jurisdiction over digital assets. And so I think to the extent that there ultimately is crypto or digital assets that are rewarded in respect of these points, I think we're going to have to, the jury's still out in terms of a lot of the questions. What I do think though is that I agree with Ferdy with what he said earlier about perhaps, there will be a trailing off in some respects, just as the parallel was drawn to the ICO market. In other respects, I think there's a lot of promise with the point system in terms of preserving optionality while still being able to identify whom your community members are. And again, I think, yeah, as I noted, I don't have my crystal ball handy, but I do think that you need to, as with anything else, it's facts and circumstances. This concept of points, to the extent that it's ever used to try to avoid or evade or otherwise sidestep laws that should apply and do apply, I think that's problematic. But I do think that as we have an increasing crossover between digital assets, video games, and things like AI, I think it's hard to say that points are going to go away in a gamified world.
Fair enough. Ferdy, what do you think?
First of all, given that Josh was mentioning enforcement agencies having and regulators having a look at the space and trying to work out what exactly is going on, I am reading a really good book called Traces in the Dark by Andy Greenberg. And it's essentially a book about how enforcement agencies go about chasing transactions on the blockchain, which of course are apparently anonymous, but then there are all sorts of tools and possibilities of tracing actors, especially bad actors. And the book is extremely well written and I really recommend it. It's very fascinating. I expect points not to be there in their current form in the future. I think if mechanisms for bringing on board participants, especially in early stage enterprises, are going to be successful, they will have to go through a lot more standardization and transparency. There is no reason why that shouldn't be the case. And I think participants will essentially demand that standards are raised to a level where more information is available. So points might still be around in the future, but definitely not in their current implementation. I know that making predictions in the crypto world is not a smart thing to do, because you are always wrong. But I'd probably say that they will certainly have to change in terms of quality of disclosure and transparency of terms and conditions.
I think we're almost towards the end of our time today. So I'm going to ask you this final question. You've told us about, we've done the summaries of everything we're looking forward to, and even where we see things going. Any final notes if people want to find out more about crypto points? Anything else that you would say to them as they're sort of beginning their own investigative journeys?
I would probably point to having a look at how some of the currently successful DeFi and crypto space enterprises started off their adventures. And I'm thinking of some of the major decentralized exchanges, perhaps, some of the platforms that allow for trading of specific assets that have been particularly successful, and sort of take almost a historical perspective, but focused and driven by those that have actually made it. And then start looking at, how many of those people came out with points or directly airdrops of tokens, how many did they do ICOs, etc., etc., and sort of use that as a guiding stick to see the ones that have actually been successful, that had very clearly extremely good business ideas from the outset, how they actually managed to sort of get off the ground and bootstrap, because essentially it's a bootstrapping problem. You have a good idea, there's a platform available. How do you make sure that you have enough users and participation? And sometimes it's a case of making the idea known so that people naturally see it as something innovative and interesting and take part. And in other cases, it's helping that process by issuing rewards and points, in fact. And so I think it's a good exercise to go and check the ones that have made it and count literally how many of them actually gave points at the beginning. And I think it'd be interesting to draw some statistics there, because my expectation is that most of them actually didn't. Now, points on the current scale are a recent phenomenon, but there were similar things that could have been used then. And so I think the comparison still stands.
And for you, Josh, any final thoughts for folks out there?
So I think Ferdy's advice is great. I also would say, if you look at things like LinkedIn and the artist formerly known as Twitter, now X, there's lots of commentary, as well as in industry publications, including podcasts like this, but also, print or semi-print publications, online print publications in the industry, including folks like CoinDesk, Forbes, the like. There also are companies that do research in the space. They may also, if you look at some of the investors in the space, whether funds or VCs or otherwise, often they'll do investor reports relating to particular topics, such as potentially crypto points. But I think a lot of it also is reading and keeping aware of the enforcement actions that are launched, the settlements that are entered into, even though obviously those don't have the same weight from a precedent perspective. But also, if you're contemplating launching a points program, talk to lawyers.
Absolutely. Well, look, we're out of time today. Josh, where can people find your work? Where can they find you?
They can find me at linkleaders.com, which is the law firm for which I work. I also can be found on LinkedIn and X.
Okay. And Ferdy, how can people find you?
Well, at the moment, I'm spending time between London and Cambridge quite a bit. But the easiest way to track me down is on LinkedIn, probably.
Fair enough. Well, look, Ferdy, Josh, thank you so much for coming by the show once again. Pleasure to have you. I have a feeling we'll see you again at some point. This has got a good dynamic that we've got going on here. So thank you so much for being here.
Thank you, Chris. A pleasure.
Pleasure.
Thanks so much. And for those of you listening out here, you're listening to Disputes Decoded by ArpTech.